So one of my number one recommendations to new drivers is to purchase rideshare insurance to cover yourself during period 1 and sometimes beyond. But those extra costs can definitely add up and make driving less profitable. Harry here with the Rideshare Guy, and today we're going to talk about if you can deduct the cost of rideshare insurance on your taxes or not. And the short answer is yes, but the long and more complicated answer is no. You probably won't want to. So first, let me explain why you might need rideshare insurance. Uber and Lyft only cover you during periods 2 and 3. And that means when you're en route to a passenger or you are with a passenger in your vehicle. That's period 3. During period 1, that's when you're online but for a passenger. They actually provide no collision coverage and much lower liability limit. So let's say you get into an accident during period 1 where you're out looking for a ride, but you don't have a request yet, you're sort of screwed, right? Uber and Lyft won't cover you for collision, and there's very low liability limits. Personal insurers don't want to cover this period either. So you can actually go check out our rideshare insurance marketplace on the rideshareguy.com and see which company available in which states, and we've got a list of recommended agents that can definitely help you and are super knowledgeable in rideshare. Now, there are 2 methods to deduct the costs associated with driving, and this is why it matters for rideshare insurance: the standard mileage deduction and the actual expense method. So you won't be able to take both deductions as a driver, so you really need to evaluate which method is going to provide the bigger tax benefit for you. So Quickbooks Self-Employed, I think, is a great option for this because it actually tracks all your vehicle expenses for you. At the end of the year, you can click one button and compare the standard mileage deduction, if you've been tracking your miles, which you should, and versus your actual expense, and you'll see which will get you a bigger deduction and obviously save more money that way. So let's talk standard mileage deduction. This is typically what most drivers opt for, since rideshare drivers put so many miles on their car, and the more miles you put on your car, the bigger the deduction, since it's a per mile deduction. It's also the simplest method because basically you're eligible to count any miles you drive for ride sharing. So that includes the miles with a passenger, of course, when you're looking for passengers to pick up, even if there's no one in your car yet, and even if you turn on destination filter, to commute into the city every day to drive for Uber and Lyft. So lots of deductible miles. And in order to really claim this deduction, you need to keep a detailed mileage log. Personally, I recommend mileage trackers. So an app like Stride Tax, which is a free app for Android or iOS. This is one of the most popular apps with our audience. Or QBSE, again, is also an option because they've got a mileage tracking feature, but it is a paid app. Now, choosing the standard mileage deduction means that you cannot deduct any other expenses related to the maintenance and of your car, right? So if you'd prefer to deduct other items, or you think you get a better deduction that way, you need to use the actual expense method. And this is where the rideshare insurance comes into, deducting that comes into play. So when deducting actual expenses, you can really only deduct the portion associated with your self-employed work, right? So if you're out driving around for fun, you can't deduct that portion. But here are some of the items that you can include as part of your actual expense deduction. Portion of your lease payment, right? If you're leasing your vehicle, auto loan interest, if you're financing the purchase of your vehicle, auto insurance, aka rideshare insurance, right? So if you're paying a ton for rideshare insurance, but you need that protection, that's where it comes into play. And then there's more, right? For more information, I'll leave a link in the show notes. You can see everything that's covered in the actual expense method. But really just remember to save all your receipts and keep good records so that you have the information you need to make a decision on your rideshare deductions. Personally, I think it's a no-brainer to use one of these apps since it makes it so much simpler. One caveat is if you do opt for the standard mileage rate, you must choose to use that in the first year the car is used as business. So in later years, you can basically choose either method, but you can't use actual expense first and then flip-flop, right? You've got to start with the standard mileage rate if you ever want to switch in the future. So you can sort of see that rideshare insurance is a must-get, in my opinion, but you won't be able to deduct it if you use the standard mileage rate. Fortunately, there are a ton of great options. I know that our viewers have been really happy with companies like Allstate, State Farm. I've seen someone on our YouTube Live the other night said that they got it for $12 a month more. USAA is a great option. So at a minimum, I would get multiple quotes. And like I said, we have this rideshare insurance marketplace, so you can see which companies are available in your state, and then you can go and get a bunch of quotes and see how much, see how little, hopefully, it will cost you. So if you guys have any questions or comments, please don't hesitate to leave them below or send me an email personally, harry@therideshareguy.com. We release new videos every single Tuesday and Thursday, so make sure you subscribe to our channel if you haven't already, and give this video a thumbs up if you liked it. All right, drive safe, everyone.